Hey traders, let's take a moment to thank and feature one of our top sponsors, FX2 Funding. If you're looking to get funded, listen up. FX2 is offering traders the chance to trade with up to $200,000 in simulated capital and receive up to 85% of their results. If you're interested in getting started, use the link being dropped in the chat or the link down in the description below. If you pass the evaluation, you'll receive your feedback and gain access to your new account. FX2 allows traders access to a wide range of assets and allows traders to hold their trades over the weekend. FX2 is giving A1 Trading Show fans 15% off the evaluation fee if you use promo code A1Trading15. So if you'd like to learn more, again, use the link being dropped in the chat or the link down in the description below and use code A1Trading15 at checkout for a discount on any of their evaluations. Now back to the show.
Good morning, traders. Welcome back to another live stream. Hope you're doing well. And kicking off a new day in the markets as we count down, I guess, the time until we start getting into inflationary numbers. On Thursday and on Friday, we have the CPI and the PPI respectively. If you don't know what those metrics are, if you're newer to trading, it is essentially some of the key inflationary metrics that traders, investors, and market participants look out for to see the progress or lack thereof in getting the Fed what it wants, basically its inflation mandate back to 2%. So again, we are kind of in this home stretch here where now I think we can begin preparing for what comes on Thursday and Friday. And we'll start out today's market analysis just by taking a look at the US dollar index. I still believe we are kind of in an unchanged environment. My view on the dollar index is still bearish as we've just hit resistance here and so far seem to be rolling over. We'll see if that does follow through. And again, my thought process with CPI and PPI, by the way, default outlook for me is that we continue to see what we have been seeing, cooling inflation. In fact, let me see if I can show that to you while we're on the subject. We'll take a look at some inflationary data, again, alongside this dollar index. It's no coincidence, I think, that inflation has been cooling as well as the dollar coming down alongside it. So we can actually show you those pieces of data to help illustrate the point, again, of what we are looking for as we come into that inflationary number. It's so key. This is again, what we've got here on your screen is the Edgefinder's inflation data shows us that, again, the US inflation number has been coming down. But what you'll notice here is recently that we've kind of been stagnating. We're seemingly having a hard time getting underneath that 3% mark. The question on Thursday is, where is this inflation read going from here? We saw oil come down pretty hard in recent times, and that has been probably a help to core inflation headline. The question is, will it trickle into core CPI? And can we actually start to see the inflation metric get down to that 2% target? And by the way, if that 2% target gets hit, or if we get closer to it on Thursday and Friday, the dollar is probably set to go lower. Why is that? Well, if the dollar, remember guys, for the newer traders in the room, let me give you a quick history lesson that matters so much when it comes to the dollar index. Look at this move. Real quick, type me in the chat if you were trading during this period. I'm talking specifically about the 2022 trading year. If you were trading during that time, type me in the chat real quick. Do you guys remember this period? It was like every day the dollar index was just shooting up higher. And it was a constant reminder from the Fed that inflation is unbeaten and this is a serious problem. And we've got a rate hike until this problem goes away. And for some time there was no end in sight. Inflation just kept going higher and higher and higher. So that environment causes dollar absolute domination. People were scared. Other currencies were getting sold left, right, and center as the Fed was rate hiking, and people said, well, the US has this strong economy. They might be able to weather this storm better than other places. And so they rushed to the dollar, and the dollar just got so strong. Right now, I think we are seeing in 2024, 2023 really was the start of this. We saw 2023 go sideways for the dollar. I think as we go into 2024, my bias is still To the contrary, we see the opposite set of standards right now. We see inflation coming down. Rate hikes are not expected. In fact, we're talking about 3 rate cuts, at least from the Fed. The market thinks there will be more. This environment favors dollar bearishness, in my personal opinion. That is, of course, what we do on this channel. I share my opinions. And remember, they are just that. I am not absolutely, right all the time when it comes to markets. And I know that sometimes I have newer traders who are listening. So let me just say, if you're a newer trader, the greatest traders on earth get it wrong. Warren Buffett bought terrible timings in the stock markets at one point or another many times. In fact, he's one to quote that of his massive, investment career, it's really come down to a select handful of incredible trades or investments that he's made. So as traders, please understand, I am not a fortune teller. I am not a magician. Traders weigh the odds of things and they play probabilities, and they get it right sometimes and they get it wrong sometimes. My opinion, however, remains until further notice that the dollar index looks weak, in my personal opinion, and that will guide me in the rest of my analysis. If you watch my streams or you watch my videos, then generally speaking, I use the dollar as kind of my core component, especially with this Fed-centric trading world that we're in right now. Hey, Rob, what's up, man? I've been focused on trading differently, but following Nick again now. Missed you so much. I missed you too. Thanks for being here with me. They said you're trash. I'm asking. Who said I'm trash? And what does that mean? I assume that means like you're bad at trading. And feel free to think that. I am certainly wrong at times. There's no question about that. All right, so gold, next up on the chart. Here's the daily chart. We're coming down to the support level. Yesterday, we had an impressive push off of these lows, and you could actually make the argument that perhaps we had a little bit of a bullish breakout, though it's a little bit too soon to call in my personal view. When I look at this chart, what I see here is that sellers are still very much overall in control, but to the bulls' credit, if sellers were really in control, we would have seen some sort of reaction to this level. We actually saw price breaking out higher. And if we start to see this behavior, I may actually look a little closer at gold. You guys know, if you've been watching, I've been bullish. I've just been waiting for an opportunity to actually find a trade setup. I don't know. Does the Edge Finder have gold as a setup right now? I don't think it does. No, it doesn't. Not quite. Yeah, gold is neutral to slightly even bearish right now. So waiting for some signal, some change. I'd actually like this column. This is the trend column, by the way, on the Edge Finder's scanner. I'd like to see it actually flip into a bullish trend. And so we don't see that. And once it does, it very well may pop up here. But this is our current readings from the Edge Finder for those of you who like to keep an eye on this. Bullish euro dollar. I am still long EU. Let's actually see. My trade is very much still flat here, literally just about where I entered the trade a few days back. So still holding on to euro dollar, still in S&P 500. My trade here is going decently well. My S&P trade gave back some of its gains here. We entered back in this area, and we'll see if we can hold this one. I did tighten my risk on this trade, so my stop loss is a bit more tight than it was. I adjusted that inside of our group, and if it does come back and retest, I am comfortable as long as we don't break these lows. If we start failing at that area, I'm going to cut the trade. I'll take a loss on it. But if this thing, finds a higher low here today, in fact, for the intraday traders watching S&P, let's see if we can hold this area. This will be very, very interesting. If price comes down to this region, right, is this going to be an area where bulls can step in and actually push price higher? We'll watch close on that. But again, I am still bullish. Got my position open, holding it through this pullback. We'll see if it is just a pullback or if it is actually a full-blown reversal. If it sells off, like I said, I'm not married to the trade. I will close out if need be. So, yeah. Nick, why is the dollar bearish? Although the numbers aren't necessarily bad from payrolls. Well, PMIs to follow the payrolls were pretty lackluster. Services PMI definitely hurt the dollar more than NFP on Friday. We saw PMIs, which are, of course, a measurement of like the economy, they were a lot weaker than what was expected. They were still growth, but mild growth. Jobs data, they revised October's numbers lower. So the jobs number was like, it was so-so, right? And so is not going to cut it. The dollar is in a bearish trend. It needs a massive change to reverse that. So the dollar, in my view, stays bearish in that camp. Like there's nothing that's super, strong and resilient about the dollar right now, in my view, when you have jobs data that, was okay, but then PMIs that were slowing, and you still have a Fed on the cusp of rate cuts. So you look at that and you say, well, how is that, what's going to change the story for the dollar? And right now I just don't see it. So that's why, again, I'm staying on the bearish side for now. NASDAQ also pulling back here this morning. And Dow, look at Dow falling hard. Did we have any follow through on that Boeing move yesterday? I don't know if you guys saw that in the news, but Boeing stock was down pretty hard yesterday off of the idea. And by the way, reason I pulled up Boeing, it's a large component of the Dow. The Dow is, of course, US 30. So there's not that many stocks in there. So when you have a big drop, it causes the whole thing to move. Boeing had a tough day. I don't know if you guys saw the airplane malfunction. There was a door that was ripped off the side of the plane. It was crazy. And people, of course, are a little thrown off by that on Boeing. Is that a buying opportunity? I don't know. I'm not too much of a individual stock trader, but definitely one to look at. Again, gold trying to break out here. Silver basically still doing nothing. Oil chopping around here, but yesterday, huge sell-off. Now a little bit of a rebound. And again, dollar index, we take a look at the daily chart. This is pretty much still bearish unless we see a dramatic shift in, price action at these levels. For me right now, the path of least resistance is to see that dollar go back to test 100. We'll see if I'm right about that. And what's really going to prove me right or wrong is probably CPI on Thursday and Friday. So yields still kind of trending lower overall despite the recent uptick. So I think this is just intact still. And again, I said euro dollar. I'm still in my trade long. Pound USD, I am bullish, but waiting preferably to see if I can get a breakout of this. So if we get a break above the highs, that could be interesting for the bullish side of things. Dollar, yen, bearish. We have this pretty clean level of resistance that seems to be being respected at the time of recording this. We'll see, how that holds. But right now, pretty good price action. This one seems to just be following the dollar. And so very, very interesting to see that. So we'll watch that close. By the way, guys, I mentioned the Edge Finder earlier. We are now doing trials for the Edge Finder. If you guys don't have an Edge Finder and you would like to test out the product before committing the full amount to purchasing it, we do have that available now. We'll drop the link here in the chat. Actually, James, if you don't have that link, the link can be found directly on the website, top right-hand side of the screen. So for those of you who just are familiar with our website, we're showing this to James or to anyone else. Top right, we added a button that you can just apply for an Edge Finder trial. So apply it here. There you go. Click that link. And there you go. It's also in the chat for you if that would be easier. So you can click the link in the chat. There you go. Edge Finder trials available. Fill that out. It takes like 2 seconds to fill out the form. And then someone from our team will reach out to you with an opportunity to check out the tool if you're interested in doing that. So take advantage. It is in the chat, like I said, right now. Okay, guys, we're going to now ask Frank a couple questions. He's in our lobby here. He's waiting patiently to give us all the answers. So we'll go to Frank in just a second. But before we do that, we're going to thank our sponsors here at A1. These shows are made possible by Eightcap, by FX2, our sponsors here that we have supporting our streams every day. So shout out to them. And here's a quick break thanking them. And then we'll be back with Frank just after this.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, Click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right, guys, we're back with himself, the man himself, Frank. Hey, Frank, how's it going? Frank was telling us in the office, by the way, that he really enjoys chopping logs. Does anyone else enjoy chopping logs? And Frank, why do you like chopping logs?
I like splitting wood, I guess, because it's satisfying. It's just kind of like building things, I guess, when things just work out and the log splits in two. I really wasn't expecting this question this morning.
Well,
that
it's
really
integral to markets here today. It's really, really important. And also, we were talking also just about like in our office when we were first getting moved in here a little ways back, Frank and I were like building all the chairs and desks, and it was a fun time. But anyways, Frank, back on market subject. What are you looking at today?
Yeah. Tying that into the markets, when everything just works out, like yesterday, that NAS trade just worked out perfectly. Members in the group were happy. It was a win-win for everyone. Same thing as chopping wood, you just get that satisfying feeling of,
That's right.
of accomplishment.
What's more satisfying than a NASDAQ 2% up day? Now, what's not as satisfying is for pulling back, but are you still in the trade, Frank?
No, I trailed out.
Oh, nice. Very nice.
Yeah, I think so. This year, as a New Year's resolution for trading, I want to have I said I want to have 3 funded accounts by the end of the year. And I also want to focus on just taking profit instead of focusing on catching the whole move. I think that, in this market, we're going to see ups and downs regardless. And when you're up, be happy with it, build your account, especially in the funding world, because I've gone through, I've been through a couple trials now, and, failing them is really easy. So instead of trying to catch a whole move and stopping out a break even and then holding on to losers for a little bit and taking stops on those, just if you catch a move like yesterday that we saw, take profit, build your account, look to re-enter on either the upswing or downswing. And
I have a question on that front too, Frank. Indices, I know are something obviously you and I trade a lot. We also trade gold a good bit, and we'll trade some currency pairs. Question for you on the idea of trailing a bit tighter, being a little quicker to take a profit. Obviously ended up being a really good decision here, especially, for if you had taken profits on, like, for example, the Dow, which has given back, 2/3 of the gain in just an overnight trading session. Question for you though, this year, do you think part of the reason maybe it's considering taking profits a little bit sooner is because we had a massive up year last year, and maybe upside here this year could be limited? So is that part of the reason, like fundamentally, do you think stocks have like just decent potential to make gains this year, but maybe not the 40% up year that we saw last year? Is that part of the idea, you think?
No, I just think that just the environment we're in, I know that we're getting dovish. Investors were super dovish by the end of the year, but higher rates for longer isn't going to, it's not going to be a 2020 or a 2021.
Yep.
So when you see good swings either to the upside or downside, it usually comes all the way back to where it was. So we could see the NAS come down to support again, or close, or even break below. Like, anything can happen. But just looking at that setup, catching a bounce, catching a nice move, that's just what I'm looking for. And honestly, this year I think it's still going to be a great year for stocks. Don't take my word for it, but I think out of all the years that we've had in the past couple, this is going to be the best one because we're finally going to get our rate cuts. So
Yep, we've finally gotten some confirmation on that side, and I think you're also smart to point out something though, that perhaps like the most aggressive bulls out there would think that the dollar is just going to absolutely tank, and that stock market stuff is just going to go parabolic again because they are kind of expecting us to just go back to a time like 2020 or 2021 where interest rates hit rock bottom again. And I think you made a good point. I mean, higher for longer. I think there's a bit of a change of narrative there. And while I would also agree, I think this year is a year that I am bullish on stocks. I've been very clear about that. I'm bearish on the dollar. I think it's worth mentioning that I don't think we're just going to snap back into a perfect, stock market ultra bull environment. There's something to point out. The NASDAQ between like the year 2000 and 2011 basically was flat to slightly negative. And the reason I point that out is that this environment, rates were actually a factor. But then you look at the following decade, like 2011 onwards, until recently, we had like rock solid, super low interest rates for the most part during that period. And it lended to a massive uproar in growth and tech stocks. If we enter back into a period like 2000 and 2011, your idea, Frank, of like take your profits when they happen and maybe lean towards more value-based stocks rather than just pure growth stocks could actually be, call of the decade even. But of course, it's too soon to say. And again, we're both kind of in the camp that the dollar should fall. The stock markets still can do fine. But I think it's worth mentioning that, and I think it goes well with your point about acting to lock in profits along the way.
and even so, we're not expecting huge rate cuts either.
Yeah,
They're talking
exactly.
like maybe one, and I think it was going to be like 75 points. So
Yep.
like what we saw all of 2022 and I think some early last year was just, we were hiking at an aggressive rate. We were doing like 50 basis points, 75 basis points
Yep.
every time. And we're probably just going to see like one this year. So it's still going to be higher rates or high
Yes.
rates. It'll be lower, but still at a high level. So I think
Right.
it's going to be very much sentiment based, and you'll catch really good days, and then there will be bad days like what we've seen. We'll see like 5% on a or 2% on a day, something like that. And
Yeah,
that's what
exactly.
we're looking
I
for, I
think
guess.
I think it's definitely a little bit of wisdom that's creeped in on us, Frank, because we've seen a couple different environments in our time already. We obviously we didn't live through the 2008 stuff, but we saw the 2021 ultra bullish market where it was one environment. And then we saw 2022, which was a devastating year for tech stocks, down 35%. So we've seen a little bit of each different style, and I think it's important to be aware of your history rather than just only looking at what, like you're saying, the stock market's getting super optimistic about rate cuts. Just have to be a little bit cautious that we don't overdo it. Anyways, Frank, I know also that you were looking at gold. Do you have a trade on gold or anything interesting to
Yeah.
on the gold side for you?
I'm still long gold. It
Okay.
never stopped me out, but it's still on the trend line. And yeah, I'm just hoping it goes up. It's on support right now. Today is not looking amazing, but at least it's holding. So if it breaks below though, it's going to be tough because yesterday I was saying the next level looks like 1980s or 1970s, and yeah, it'll just be a waiting game, I guess.
Yep. Well, we'll see how that gold trade does end up going. I also like it bullish. I'm waiting for like a 4-hour chart opportunity to get involved, and I'd also like to see the edge finder tick into a bullish territory, but I'll watch that close. Frank, thank you for coming on the show. I'll leave it there with you, and we'll have you on, of course, throughout the rest of this week. We've got CPI and PPI ahead, so I'm sure we'll hear more from you then. Thanks for coming on.
Sounds good. Thank you.
See ya. All right. So to continue on with what Frank and I were talking about, again, Frank had some great points there. This year, I think people are incredibly optimistic. They think that the dollar downside is inevitable. They think that the stock market is just going to roar higher. And while I am a bull, I think it's also worth mentioning areas of the market like gold. Like I think gold has upside this year for a number of reasons. If the recession fears kind of creep back in, and I know that from previous live streams, Frank and I have made this point several times, and some of our other guests have pointed this concept out. I know Ivan is also on this train. If you get an environment where the economy does start to slow down, like we do start to creep in on recession fears, I'm not necessarily calling for that, but if it does happen, a place that I would like to be in the market would actually be gold, because in that environment, people might lose a little faith in the U.S. government's ability to just kind of correct a recession instantly. The other side of that, by the way, is that if you get a recessionary environment, people might also start calling in the U.S. government debt. And U.S. government debt is a huge potential bullish catalyst for gold, because if the U.S. debt is super high and the economy is hurting, and we also need to, take in way more debt to help stimulate the economy, it can cause that fear to spiral, and that can actually be bullish for gold. You also have other catalysts, war potential. We have all sorts of different variables that could, in my view, help to boost up the price of gold. It's also in some ways a bit of a portfolio hedge, which is a beloved feature of gold for both investors and traders alike. But I think gold has potential to move higher. I put out a whole video on that subject on my channel recently. It's had a slow start, but one of the big reasons here is that we've also had seasonality. Actually, we'll go monthly here. We'll take a look at the seasonality month over month and take a look at this here. But we can go see that gold has in fact seen a pretty good rise, historically speaking, last 10 years in the opening months of the year. And so I do like those sort of that extra odds that we could see a nice little boost in the price of gold in the opening portions of this year, especially if that dollar does stay bearish. So that's my outlook on gold. Again, not a great start for the year, but Frank's bullish. I'm bullish if we can get a breakout. I don't have any trade setups currently that I'm immediately setting up, but I would like to watch this. And if we can get, for example, something like a break of this 2050 level, I've talked about this for a few days now, I'd be interested to potentially take a stab at going long, but I'll watch this close. If I do take that trade, you guys will see it in the signals group. If you're not in the signals group and you would like to join the signals group, we're going to drop a link here in the chat as we speak. You can click this link. It will connect you with someone on our team who can give you pricing details, who can give you all the different features that are available in the VIP Discord. And of course, as a YouTube live stream viewer, if you use this link and you chat with us and let them know that you were watching the live stream, we're going to be handing out huge discounts today. So click that link. Let us know that you'd like to join the VIP Signal service. Come trade alongside Frank, myself, and others, and you can get involved in all of that with us in 2024. Should be a huge year, and I'm certainly excited to see where everything goes. Again, it's been a lot of prep here, a lot of prep work on the channel and on the turn of the year, looking ahead to this year, and I'm interested to see how things play out. Again, if you are not already in the group, join us. Click this link, become a member today. You can trade alongside us, get access to our trades. I'll show you what that looks like while we're on the subject, just so you have a context to what we do inside of the group. We share all of our trades inside and out, analysis, breakdowns, entry levels, stop loss levels, why we're taking the trade, screenshots behind each and every trade. This is essentially a way to track our trading journals. And I say our because you get mine, you get Frank's, and you get Ivan's. So when we take trades, you get to read through them. And this is a service that we offer. We spend a lot of time writing up and working with our viewers inside of the VIP group. And again, like I said, we're offering a big discount today. If you shoot us a DM on our website using this link that's in the description or in the live chat as we speak. So, heard the stock market's likely to crash this year. If you took up, I bet you, Rob, that, and I'm not criticizing this idea because it could crash this year. I'm not saying it can't, but here's something to think about. Every single calendar year, if you searched up stock market crash 2023, stock market crash 2022, stock market crash 2021, 2020, all the way back. Throughout its entire history, pretty much, people are always saying the stock market is going to crash. And there's always a reason for it to potentially crash. But timing a crash is like the hardest thing in markets. Because look, here's the thing. I'll show you a quick example as to why betting, the stock market and trying to time a crash is terrible. Now, I'm not saying you can't be short at points and make money in the markets, but it's incredibly difficult. If you scroll back on this chart, we can go to a monthly chart really quick. And let me make this point. If you had said market's going to crash, market's going to crash, market's going to crash, market's going to crash, you would have lost all of your money and still have been right, but you would have been years early. If you'd started saying market's going to crash, market's going to crash, market's going to crash, you would have just lost everything, right? So my point is that's a really hard bet to make. Here's my opinion on how to trade a market crash. If a market crash actually is happening, I don't need to be the first one to short the market. I would perhaps look at joining the move. Like in hindsight, I should have been a little bit more bearish in 2022. There was some good reasoning to be, and there was probably a lot of money to be made on the short side. But I don't call a top on the market. This market could fly higher. But if it starts to trend lower, we break structure, sure, maybe there's some short side action that you could look to be a part of, or perhaps be cash heavy, or there are, of course, active ways to manage that sort of situation. But my point is that trying to predict a stock market crash, absolutely not for me. Reacting to and potentially adjusting to a market crash, definitely more interested, right? Again, the stock market could go up 30% this year. I'm not saying conditions favor bullish for me. So I'm not betting against this move. I am more bullish. I mean, clearly I have literally trades on that I've showed you guys on the S&P 500 as we speak. I'm bullish S&P. By the way, my stock market holdings in China, not looking so hot here today. We're starting out red right off the bat. So we'll see how that trade is. A very small position on my account, but long US and Chinese stock indices. One is, of course, higher risk than the other, I would argue. Of course, China being a very small position in my account. If you're wondering, by the way, which brokerage I'm using WeBull as a US client. I can't trade CFDs, so I can't trade XAU USD or NAS 100. I have to trade ETFs or futures, but the one I prefer is ETFs. And if you are not already using WeBull and you'd like to check it out, we do have a link available in the description of this live stream. You can click that and you can sign up for WeBull if you do choose to use that. Full transparency, it's a affiliate account. And so if you use that link, you will be supporting the show here with your sign up. So you'll get free shares when you sign up with it, and so will the show. All right, so NASDAQ holding some of its gains, gold still staying strong. It'll be interesting to see. Top setups page still lending towards bullishness on indices, bullish on the euro pairs, interestingly enough. Bitcoin staying bullish, pound dollar staying bullish. I do own some Bitcoin, by the way. Not really as a trade, I just have some. That's been interesting to watch recently. Bitcoin's kind of, let's go just quick look. Not something I trade, not something I really follow too closely, to be honest, but with the crypto or the Bitcoin ETFs that are looking increasingly likely to come out, the Bitcoin world is on fire. Look at this, guys. We're trading at 46,500. A very, very impressive move. And again, Bitcoin looks bullish. This is a market that I definitely do not fade when it's moving higher. Like when it's going strong, we stay far away from trying to go away from it. Please stop advertising. This is a free live stream. You don't have to watch it. And we do advertise because that's how we can support these streams. Don't get me on that rant because I will spend too much time making that point. But at the end of the day, if you understand that there is value here and that we also put a lot of work into it, you shouldn't be bothered by periodical advertisements. Actually, I don't know, is that a word? Periodical? Periodic advertisements. They support what we do here. So if you don't like the ads that come up sometimes on the show and you're enjoying the free content, then I'm sorry, but it might not be the right live stream for you. So Please advertise again. Okay, yeah, let's advertise again. Just because of that, let's see, what can we advertise? Okay, here's a free advertisement. If you're not in our Telegram channel, join our Telegram channel. We put out daily market research, ideas, technical setups. Again, we have a team of people here behind the scenes. If you would like to read up on our latest periodical advertising here, if you would like to read up on the latest from our team, Frank and I are putting in research and articles and setups, etc. We also have our technical indicators that dropped. So there's your ads. So if you don't like it, leave the stream. Do we have the Telegram link? There it is. Thank you guys. Appreciate you. So there's the Telegram link. If you would like to join the free one there, you can join it for free. Like I said, how's that for, I don't like the ads. I'm sorry. That was kind of aggressive, but you have to understand from our perspective, we put a ton of time and effort into these videos. They're like, the way we try and partition them is like 90% genuine trading content, free value to the community. And then 10% is like how we can actually support it financially. We run ads, we offer products, we build tools that we spend countless hours building. So clearly I got triggered. Euro holding. This one, I've been so surprised by the euro not making any moves, despite the dollar actually seeing some volatility. I guess the dollar is kind of flat too. Euro dollar. I am still long. I just want to say this in terms of CPI. I recognize that I'm holding a couple trades into CPI. If CPI comes hotter than expected, it is pretty likely that I'll get stopped out and I'll lose money on euro, and then I'll lose money on the S&P. But the overall trend is still disinflation is kind of the key factor here. If we can get some cooling inflation numbers, I should be set to hold on to a good trade there. Fing Book. I'm not sure if I'm saying your name right or wrong. Thank you very much for the $2. Interview Lifer on BTC. I'm not sure who that is. Lifer on BTC. I would always be happy to interview somebody though. Let's see. Thank you again very much for the donation to the stream. We appreciate it. How do we know which news events are impactful to pairs? That's a great question. I think that, it takes a little bit of just a little bit of learning to figure out which events. Like, I'll show you a couple things here. So go to the economic calendar. So on the economic calendar, we've really prioritized the ones that we think that are most likely to potentially cause some volatility. So if you have the Edge Finder, you can just go to the economic calendar. If you do not, you can just learn which ones generally move the markets just by experience, to be honest. Like US CPI is almost always super market moving. Now, it used to not be so market moving. Before all this 2020, money printing that went on, there was a period where CPI was actually not very interesting, but it's become very interesting in recent years, and it could change again in the future. But right now, CPI, very important. PPI is another inflationary metric. Anything to do with the Fed or inflation or interest rates. Again, a little research goes a long way with this stuff. You can figure out by just like kind of looking historically at what has been moving the markets and keeping up with like the videos. We cover this stuff all the time. So that's a great way to just learn which ones you probably need to look out for and be aware of. Really enjoyed the Edge Finder updates recently. Thank you. We've been really pushing on the new features. For example, we have the investor sentiment. I think this indicator is so cool. If you have the Edge Finder and you watch indices ever, or you just want to get an idea of market sentiment, check this new page out. I love this new page. It is the AAII Investor Sentiment Survey. It surveys many, many investors on what they think is coming for markets next. And what we can see, and specifically it's like the stock market sentiment, but that of course carries over into everything else, currencies, etc. Look at this. I find it so interesting that the market topped out right around when peak optimism, this yellow line represents the bullish percentage minus the bearish percentage. So when we got super bullish, when the crowd got super bullish, it actually marked a pretty good topping point for the S&P and the NASDAQ. Right now, we're creeping back a little bit more into bullish territory, but it should be interesting to continue to watch this. It's sort of a red flag here when things get too bullish or too bearish for me. So I'm watching that one close. So that's a newer feature. We also have the smart money indicator. This one's really, really cool. The guys did a really good job putting this one together. This is euro dollar, for example, and we now can track institutional money versus retail money. What is the institutional money doing versus what is the retail trader doing? Not guessing based on a candlestick pattern or anything like that. This is the hard, data way of actually tracking institutional money versus, amateur money. The issue that I have sometimes is that a lot of traders, they think they have like some sort of certainty of knowing what institutional money is doing based on looking at candlestick patterns. And I think that is kind of not the truth. The reality is that candlesticks can be super deceiving. They can have a lot of noise in them. And if you read too much into a signal, you could just totally put your hard-earned money on the line without any sort of solid grounds. Here's the thing. If you take a look at COT data, it is giving you net institutional positioning from the CFTC. So it's like the direct source. And what we can see here is that if you look at the euro, institutional money has been really bullish. Retail money has been more pessimistic and actually has started to get more pessimistic in recent days. So I find that really interesting. And this is part of the reason why I have a euro dollar long trade open right now. By the way, you can select any currency pair or asset that you'd like. We've got them all in here. This is a new indicator on the Edge Finder. If you don't have the Edge Finder, we'll drop a link here in the chat. We'll do a huge discount at the end of the stream. If you guys would like to get a copy of the Edge Finder for yourself, we are a software company out of Atlanta, Georgia. We put on these shows and we build software behind the scenes each and every day to help traders use more data to empower their trading. And if you do not already have a copy of the Edge Finder, here's a day where you can get it for super discounted rates. Send us a direct message, click this link. It will take you to our website where you can chat with a person on my staff who will get you set up with a copy. Thank you guys for hanging out with us. That's going to end the stream here today. I believe we do not have anybody else coming on as a guest, but Frank and I think Frank helped us hold it down today. And hopefully you guys got something out of it. If this video was helpful to you, if the stream was helpful to you, hit that thumbs up button, come back and hang out with us. We are here live every morning, Monday through Friday, whether it be me, someone else hosting, or our guests that come on the show. We're trying to keep it real and keep it helpful to traders who are watching. So thank you very much and for watching, and I hope you have a great rest of your day. See you guys.
All right, thanks again for watching today's show. Our goal at A1 Trading is to continue to bring you free value through our daily videos and articles, keeping you up to date with the latest market coverage. If you like our content, make sure to subscribe for more. And hey, I'm going to need you to get out of here. We got some heavy equipment on its way, and you're kind of in the way, so you need to move along. Frankie, that hard hat needs to be on your head.